3 years after the pandemic hit us, how do you see credit quality in general from here on?
So the way I look at credit quality, as you know, we are focused on MSME, SME sector for the past many years. The way I look at it is, how's our performance in collections and recoveries, and how's our performance in new sales origination, that is new loans booking. So let's just take that two things separately. The first quarter of last year, that is 2021-22, was one of the biggest challenge because we had just come out of the COVID pandemic wave 2. The delinquency and NPAs increased substantially in spite of the fact that there were opportunities that were given by Reserve Bank of India and government in terms of ECLGS, restructuring and so on. See, when the shop itself is closed, it's not easy to recover any money from that customer. But very happy to say that from August, September of last year, step by step, customers' ability to repay has grown substantially. Even though NPAs slippages are increasing, we are able to almost equal by upgrades and recoveries. In fact, upgrades are higher than recoveries, which shows that the health is coming back. That is number one. Number two is the credit demand itself from the MSME, SME sector, Raghu, is really quite good, because when we are talking about the targets to our salespeople, I hardly find any resistance in terms of, no, this can't be done. No, I think this is too high. They're saying, yes, I think there is an opportunity. Let's do that. And I think market numbers also seems to indicate. Last point I want to make is, this is a favorite example everybody will be giving. I'm also giving. I was recently there for a customer meeting in Bangalore and then customer meeting in Pune. The amount of time it is taking to move from one place to the other, the hustle and bustle that you see on the road and in the markets, just tells you that things are definitely back to either pre-COVID levels or better. So that is a good indication of the credit environment changing.
Can you give us a more granular understanding of your MSME portfolio in the sense of ticket size, which industries they are located in, or are they embedded in supply chains of large corporates, or are they standalone?
We do two types of, first of all, our target market is MSME, SME. Okay, which means a customer has to be a self-employed customer. So what we do is, we do number of products for those customers: home loans, business loan, working capital loan, tractor, KCC. All these are given to self-employed. Even a person who is a farmer is a self-employed person. Now, what our ticket size in business loan and home loan is average 20 to 30 lakh rupees. Okay, and they can be from any industry, but usually they are traders, either wholesale or retail, and they could also be providing services. Services could be, he could be a marriage hall, for example. He could be having a beauty, she could be having a beauty parlor, for example. So any kind of services also we give. And what we are finding is, uniformly, all these are coming back to good demand and better than normal performance.
You are very particular that you will focus on secure lending. Now, given that several small businesses may not have adequate collateral at times, is there scope for innovation out here?
There is definitely scope for innovation. See, we are clear that our strength is giving business loan, home loan, working capital loan, and it has to be backed by security. One of the reasons why our upgrades and recoveries are so strong is because we have always insisted on self-occupied home or self-occupied business, or both, as a collateral. Usually, an SME will not give up these collateral, and therefore, the preference for them to repay our loan will be at a higher priority than an unsecured loan. So there are other companies that are providing unsecured loans. Even fintechs are providing unsecured loan. Wherever possible, we have tied up with some of these fintechs to see what kind of products we can explore. But our core philosophy is to give secured loans to customers, because that is what we believe will keep our portfolio in good this thing. Yes, I agree. Some of the customers don't have collateral. That doesn't fit into our target market.
Now, your bank is also partnering with NBFCs for co-lending. Why do you see this route as having served the bank well when the industry's general experience is sort of mixed? In the sense, the interests of the bank and the co-lending NBFC do not match at times, more often than not.
When we put our strategy on co-lending, we said the following. Number one, the product or segment that the co-lending partner is doing should be different from what we are doing. So we said very simply that the segment or the product that the co-lending partner is doing should be different from what the bank is doing. That is number one. Number two is the geographic presence of that particular co-lending partner should be bigger than our presence. We are only present in about 400 plus locations, in a branch sense. And the third, of course, that RBI requires you to be in PSL. Now, our experience has been pretty good. And we also, of course, chose partners who can scale up and who also have reasonably good technology, so that we don't have to get into a lot of manual process and operational issues and so on. It is still very early. It has only been 1 year. So far, our success is we are very satisfied, and we are looking for more partners. One more thing I want to say, Raghu, is that compared to a large bank, partners are happy to talk to us, because in a large bank, maybe the NBFC which wants to do co-lending gets lost in the size. Whereas in our bank, they get requisite attention from the management and the operational people, so that it becomes a success. That could also be one reason why we are more successful.
If I heard you correctly, you said that you want your partner to be in an area where you are not present.
There should be less overlap. Okay. So I'll give you an example. The average ticket size of gold loan that we do is 2 lakh rupees. Whereas the partner with whom we have signed up is 50,000 rupees is their average ticket size. You can clearly see there are two different segments. And the partner with whom we have signed up for this gold loan are present in large number of locations. We are present in less number of locations. So there is very limited overlap in geography as well.
So if I were to infer from that, you are not looking for partnerships for partnership's sake. You want new markets also to be mined, correct?
Correct.
Rather than more of the same by way of the portfolio, correct?
Correct. And we should have an advantage of either a segment or product or both.
Now, can you give me a sense of the mix of your retail to your corporate portfolio, and which is growing faster?
Corporate has been flat at about 10-11% for the past many years. We are not interested in growing our corporate book. We want to be granular in our loan book. 85% of our loan book is 3 crores or below. It is one of the most granular book that probably exists in the size that we are talking about. I don't think many banks can boast about that kind of granularity. And that's also one of the reasons the quality of the portfolio remained intact despite severe stress from COVID.
And why do you want such a granular book in the first place?
See, for a bank of our size, we have a slight disadvantage in cost of fund as compared to larger banks. If you want to compete in corporate lending, then your cost of fund has to be at least 75-100 basis points lower than what we have. That is a very important thing. Secondly, the market for SME, MSME is very large. 63 million is the estimate of SME, MSME target market. So for a bank of our size, when there is so much good business to do, why do we need to have any interest in corporate lending. And third is recovery in case a loan goes bad in corporate is very difficult because you have to coordinate with so many banks to arrive at a solution. Whereas when it is SME, MSME, usually we are the only bank, or maybe there are two banks. It's and the collateral is with us. So therefore, it is not so difficult to resolve the NPA.
If it is put to you that if there's a portfolio weakness, you have to chase that many more number of borrowers, how would you react to that?
See, it is a business where you need to build scale. If you see the number of employees that we had last year was about 6,500. We are currently almost at 9,500. You need to develop operational excellence. You need to have technology to support improvement of the processes. So all that has to be continuously worked on for you to be successful in a granular portfolio. I met one entity today, and we were looking at some partnership. They have very good technology and so on. And they also have an NBFC, and they do SME lending. And the CEO told me that despite all the technology, they still rely on traditional method of lending in SME, which is like meeting the customer, understanding their requirements and so on. And that is exactly what we do. And for that, you need to keep training people, improving your processes, introducing technology to ease the origination and maintenance process. So it's a continuous improvement journey.
Will lack of size become a handicap for you at some point in time, even if this question appears academic to you?
We are at about 46,000 odd crores of balance sheet. We lost about 12-15 months during COVID, where we grew only 7% on a CAGR. Between 2010 to 2020, we grew at a CAGR of 22%. Right now that COVID is over and we are putting the growth back on plan, I think we are likely to double our balance sheet between 3 to 4 years, and in about 5, maybe 5.5 years, we are looking to become 100,000 crore kind of balance sheet. So I think there is a place for banks like us who are focusing on SME, MSME. I don't see too many disadvantages about that at the moment.
Now, Murali, lastly, you will be completing 15 years in the corner office at DCB Bank in FY 24.
Yes.
When can we expect succession planning to begin?
As part of the governance process, Raghu, we have to always have a succession plan. And these succession plans are reviewed by the board, nomination committee, and also looked at by the regulators. Okay. So I can say that succession plan is not something that I have to do now. It is something that has to be looked at by all responsible management and board on a continuous basis. And that is what we have been doing. Now, the new CEO has to be in place by April 2024. I think the regulator may need a few months to process the shortlisted candidates. So I think the NRC is pretty much on top of this along with the management team, and we should be able to do the job very properly by October or so of next year.
Murali Natarajan, it was a pleasure speaking to you, and thanks for being on the BS Banking Show.
Thank you so much, Raghu. Thank you, everyone. Thanks.
Yeah.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.